First of all, let's start with inflation, something we've talked about, I think, every single week. But we got really some news this week, in no small way because of what happened with the 10-year yield on the Treasury, which really spiked up. It's still a modest number overall, but it climbed really quickly. And you and I have talked about the question, if we really have an inflation problem, why isn't the 10-year yield going up?
Look, it may be that this is a recognition of some combination of the fact that we're going to have more inflation and that the Fed's going to do more than people thought it was going to need to do in order to contain inflation. You know, once these things start, they sometimes have a tendency to trend. So I stand by my view that markets are substantially underestimating what's likely to happen to interest rates before too long. You know, if you look at the so-called Taylor rules, predictions of Fed behavior, and you feed any kind of traditional Taylor rule through with the way current economic data is running, it points you to a pretty substantial concern about inflation overheating. So I've got pretty real anxieties. I think what's happening with oil makes the kind of parallel that I've drawn to the 60s and 70s look more real. We just seem to be having a lot of surprising bad shocks that are lasting longer than you think. And when you keep being surprised again and again, it suggests that there's a pattern and you're missing it. I think that's a bit the case with inflation. And of course, this week we saw some growing sense that while Europe is not nearly as far along in this as we are, that even in Germany, inflation's rising to surprising levels for them.
At the same time, we have a back and forth up on Capitol Hill about spending more money, more potential fiscal stimulus. This week we had Joe Manchin, the senator from West Virginia, come out and say, I don't like $3.5 trillion for this Build Back Better plan. I like it more like at $1.5 trillion. Now, I don't know exactly what's in Joe Manchin's plan, but I remember last week on this program, Wall Street Week, you said what you thought they should do is do something less than $3.5 trillion and make it more targeted. Is Joe Manchin taking the Democrats in the right direction, do you think?
Look, I think if the bill shrinks somewhat, even more important if it's paid for, even more important if it's paid for without gimmicks. I worry about too many things being done where they're funded for 3 years and everybody assumes it'll be funded after that, or it's announced right now that it'll start being funded in 7 years. It's crucial that there be some quality to the spending relative to the revenue, rather than excessive reliance on timing gimmicks. It is hugely important that we pass a bill. It is hugely important that we start doing more than we have done on climate change, for example. And I'm not sure that we need to do everything that Senator Manchin is calling for there. I think there's a lot that absolutely needs to happen, even if there is some short-term dislocation. So I'd like to see, I think it's desperately important that we pass a bill. I hope that this process of compromise will eventually get to an end. And I'm guardedly optimistic that at the end of a process that won't have been pretty to watch, we'll get something that may not correspond to some people's dreams, but will actually be a strong set of initiatives to invest in the future of our country that's more significant than anything we've done in a long time.
Larry, I wonder if you see a possible connection between these two things, inflation on the one hand and what we're doing with climate on the other that you just referred to. In this sense, we saw, for example, natural gas prices really spike up in Europe. We've got problems now in China. Is this something that is really going to stay with us on the inflation front? Because as we convert over to potentially zero greenhouse gases, there's got to be a cost.
I think that's a risk. It's a complicated thing, David, because if you reduce the demand for fossil fuels, that will presumably reduce their price, not increase their price. And that aspect of it will be anti-inflationary. But I think this is something we need to carefully monitor and watch. I think the time frames are somewhat different. The inflation threats are of things becoming a bit unhinged in the next year or two. The climate plans are things that will play out over quite a long time period. But it's absolutely something that we need to pay very close attention to as we set the policies going forward.
Another.
If I could just say, can I just add something on the
Please.
subject of the tax debate that we're having? I don't think it's going to happen. It would be fantastic, actually, if we were able to place some kind of tax on some kind of fee on fossil fuels, not laid directly at consumers, but placed upstream on the businesses that produce them. I think that would be probably the best public policy there, as the late George Shultz and I advocated several years ago. Beyond that, I do think that one thing Senator Manchin has said is absolutely right, and that is that we should be repealing much of the Trump tax cuts. There is no conceivable reason why we cannot have a 25% corporate tax rate in the United States without damaging competitiveness of U.S. companies. Costs of capital are near zero. It is not cost of capital that is inhibiting investment right now. This is something we surely should be doing. And on that, I am right with Senator Manchin. I'm right with the administration. I hope Senator Sinema, it's not clear exactly where she stands, and she studied all of this very, very carefully, but I hope she will see her way clear to support a carefully measured tax program that raises revenue we surely need from people who surely can afford it, without doing damage to investment.
Larry, finally, there's another item pending up on Capitol Hill. That's this debt ceiling. And everyone seems to agree, Republicans and Democrats, we're never going to default. At the same time, they don't seem to find a way to actually raise the debt ceiling without raising the specter. What do you make of that debate? And maybe as important, Larry, what do you think the rest of the world is thinking as they look at this?
Games of chicken are really dangerous. People who play games of chicken never plan to crash their cars and die, but occasionally they do. And that's the risk in this thing. And I hope people will find a way to recognize reality. There is no magic solution that is going to get us through this. Some 50 people in the Senate and 218 people in the House are going to have to take a vote that they would rather not take, but that there's absolutely no choice for our country to take. And I just hope we'll find a formula where that's done. You're already seeing the effect a bit in the Treasury markets on securities that are coming due soon. The longer this happens, the longer we look like a country that's having difficulty governing itself. And that's an important issue for our international perception. Most important op-ed of the year was written by Robert Kagan in the Washington Post this week, and it discusses how there's a real danger to American democracy from authoritarianism coming out of President Trump and many of his allies. And there is no responsibility, much more important than whether we have this size tax bill or that size tax bill, this inflation rate or that inflation rate, is that responsible officials find ways to marginalize that, I never thought I'd say it in the United States, authoritarian threat.